My name is Mark Seymour, co-manager of the Northstar Managed Fund, and this is an update for the second quarter 2023. The fund has enjoyed really good returns over the last 5 years, outperforming peers and doing so at much lower risk. Over the shorter term, the fund has benefited from exposure to local financials and global assets, and conversely been negatively impacted by exposure to resources and local bonds. In terms of the market outlook and the shaping of the portfolio's positioning, inflation has been dropping and quicker than expected. So locally, inflation is expected to drop to below 5% within the next 12 months and below 3% in the US. To a large degree, this dynamic has been priced in by global assets, global US treasuries being positively impacted, so yields are really low longer term, and also global equity markets have performed really well. Conversely, the local bond market has not performed very well. Also, the local currency has been negatively impacted. We've had extended periods of load shedding, and also South Africa's neutral stance on the Russia-Ukraine war weighing heavily on local pricing. Considering all these factors, the Northstar Managed Fund remains predominantly exposed to local equities, so 49% exposure to local equities with an underweight in resources. Outside of that, the fund has 14% direct exposure to local bonds, with some additional exposure to floating rate notes and inflation-linked bonds and cash. The fund still maintains a substantial exposure to offshore assets, and there the exposure to global equities and to very high quality companies on very decent valuations. In addition to that, there's a small exposure to the front end of the US Treasury curve, so very short dated bonds there on yields above 5%. Outside of that, the fund also has a small holding in gold, so about a 3.5%, as a further risk diversifier. So all in all, the fund is really well positioned to continue delivering real returns for the South African investor seeking stable returns.